Welcome to the second day of the Fintech Summit. My name is Thibault de Barsy. I'm the Vice Chairman of the Emerging Payment Association for the countries of the European Union. And I'm pleased to be your master of ceremony this morning with a session dedicated to digital banking all over the world. As you may already know, given the context, we will be welcoming speakers on stage, but also remotely. In addition, welcome to those who follow us online, thanks to the broadcasting platform, and welcome to those who are present today at the European Convention Center here in the beautiful Grand Duchy of Luxembourg. Before starting this morning session, I would like to thank the partners and sponsors of this event, which allowed us to present you this 2 days Global Tech Conference. Now, if you allow me, I have a few welcome words on my own, and I propose to give you 5 insights on digital banking. First of all, insight number 1. In the battle between the incumbent banks and the neobanks, who has the high ground? And this will be debated later with our friend from PwC. Well, digital banks, neobanks, are supposed to have the high ground. Why? Because they have light infrastructure, they have lower costs, they have flexible product schemes, they have fresh new brands appealing to a younger audience. But actually, the traditional banks have never been better in terms of profit during the first half of 2021 for a long time, and their market share is doing quite well. So why? Well, this is a slide from McKinsey, and what you can see on the left is the typical profitability of an incumbent bank per client, and on the right, the one of a digital bank. What you can see is that the traditional banks are doing a very good job at generating net interest income thanks to the credits that they are granting. On top of that, the incumbent banks are very good at selling you 5 or 7 products per client. They are very good at cross-selling. On the other hand, the neobanks, they are often relying on one single core product, which is often payment, by the way. Payment, which generates interchange revenues, but they don't generate interest revenues. And at the end of the day, they end up with low or negative results. So think twice before saying that the neobanks will conquer the world and the traditional banks will disappear like dinosaurs. I used to be one of them, and look where we are 30 years after the internet was invented. The traditional banks are doing pretty well. Insight number 2. The valuation of many well-known fintechs has nothing to do with their true innovative nature. Well, look at this. Money is flowing to fintechs. Of course, 2020 was not a very good year, but if you look at the first half of 2021, well, we are probably going to have a record year in terms of money flowing to different fintechs. Now, is it because they all have groundbreaking innovation or a unique differentiation? No, it's related to the fact that money is constantly flowing to fund any idea out there. Now, of course, it's great for entrepreneurs, but it's derived from a situation on the financial markets with negative interest rates, and there is just too much liquidity and not enough assets out there to fund. So it can continue to work as long as the liquidity does not dry out. Watch out, the rest of the story. Insight number 3. One of the biggest questions in digital banking is the right scale. Now, for many fintechs, the globe seems to be the only scale at which they can succeed in the long run. But can they? Well, in principle, it's very easy to internationalize a fintech, right? You just have to change the URL from .com to .uk to .lu to .fr. But now let's take the first contender for the title of the preferred global bank of the next generation, of course, Revolut. Well, guess what? Revolut is multiplying its losses at a faster rate than it multiplies its amount of clients. And maybe, I'm just saying maybe, this is due to the fact that UK was the perfect cradle for them with an open economy, a fluctuating currency, and foreign communities. But now that it expands to the US, Brazil, Russia, which are not that open economies, well, you can see that the cost of going abroad is much higher than expected. And this has been theorized in very concrete terms by my good friend, Mr. Kapferer, who has listed all the problems that come up when you go abroad, starting, of course, with the legal differences, the difference in the competition that you are facing, the consumption habits, which are not the same, and there you go. The extra income from abroad does not compensate the extra costs. Insight number 4, the cloud revolution is only beginning. Well, this is a little story from my friends at Banking Circle, here a bank established in Luxembourg, specialized in B2B payments. Well, its founder used to tell me that when he started his first business, well, he needed 5 million euros, he needed a PI license, and the regulators told him that no cloud was allowed and he has to build its own infrastructure. Well, only 4 years later, only half of the capital was needed for another business, and everything was built on Amazon Web Services. So here you go, with infrastructure as a service, banking as a service, payment as a service, banking software as a service. It is, of course, much easier now to start a new bank, a fintech, etc. And maybe this is where the real revolution is happening. It's not in the fact that your brick and mortar branch is replaced by a website or a mobile application. It all happens in the back kitchen. And insight number 5, let's go back to the basic. Let's go back to the product. And the key product in banking, sorry to say, is still credit. Well, guess what? Within the European Union, the meaning of the word credit, the legal definition of a credit, the regulatory framework applying to credit, and above all, the consumer behaviors versus credit and debt are not the same. But there is room for innovation, of course, and one of the striking examples is, of course, the Swedish fintech Klarna, which basically invented buy now, pay later. But even Klarna has some difficulties internationalizing, as its credit loss ratio increases a bit more rapidly than the growth of its revenue. And what you can see here on this map is that within the EU, we see many contenders who are doing a very good job at understanding the local needs of merchants and buyers in the different national markets. Why? Because they understand that a credit in France is not exactly a credit in Germany. So, as a conclusion, the digital banking world is full of promises. We will talk about this morning through inclusion, infinite choice, new global brands, but the harsh reality is that it is much more complex, and this is why we have a great lineup of guests this morning. So, let's start right away with the first topic of the morning, which is digital banking all over the world. Banks struggle to improve customer experience. The quest for personalized digital interactions continue to align with customers' expectations. And our first speaker of this morning is Miss Isabel Jenkins, partner and head of financial services of PwC UK. Isabelle has been involved in a large number of critical projects for the banking industry on a global basis and has been a partner of PwC for over 17 years. Moreover, she was previously PwC's global digital banking leader. And today, she's with us to give us more details about digital banking globally. It's just not what you do, but how. Is Ms. Jenkins with us? Well, in the meantime, if you are interested in all those topics, the Emerging Payments Association has published a great report about the payment landscape in the different countries of the European Union. So you just go to emergingpayments.eu, and it's a 170 pages report with an analysis country by country of the different actors, traditional actors or new players in the payment field in the EU. Mrs. Jenkins is with us. Good morning, Isabelle.
Good morning. How are you? How lovely to be with you.
Thank you so much for being with us.
It's a pleasure. So thank you so much for having me here today. It's an absolute pleasure. My name is Isabel Jenkins. I am the Head of Financial Services at PwC in the UK. And I've been working in the really exciting area of digital banking for the past few years. I have 15 minutes to share my insights with you as to what we're seeing in the market. And there's so much to cover, and I know I haven't got very long, so I will have to be quite quick. What I really wanted to start with was it's been incredibly exciting over the last few years looking at the development of the neobanks. And they've really set a new benchmark globally in terms of the digital service and the experience for customers. And this is really changing the expectations of customers in the market. And whilst this started in the retail space, we now see those expectations and these digital services moving both into the wealth space, both for the customers themselves, but also interestingly for relationship managers. And now we're starting to see that move out into corporate banking as well. And what are the sort of things that we see from the neobanks? The first thing, and I'm going to come back to this about the success of digital banking, is a fantastic user interface. It has to be engaging, it has to be easy to use. We also have seen the growth of the use of features such as marketplace. And this is where the digital bank is not just selling their own services, but they are offering a wider set of services that might be pensions products, they might be long-term saving products, but also, and we'll come back to this when we touch on Asia, they will be non-financial services as well. So it might well be travel. The other thing that we see in terms of the features of the neobanks is using data and analytics to give you insights into your spending, to give you recommendations, and also this concepts of perks and benefits, that if you follow certain behaviors, if you do certain things, you get benefits back from the neobank. So that's what we've seen in terms of what's happening with the neobanks. What then is happening in terms of the legacy financial institutions? And it's really interesting because I think, you know, many of you in the audience will have had these discussions and will have heard, and for a long time, there has been the aspiration to replicate the success of the big digital companies and the platform businesses outside of FS. So you will have heard people talk a lot about wanting to implement a Netflix model or a Spotify model. And actually what we've seen is actually limited progress has been made. And I apologise, I'm mainly using UK data, but I think it highlights some of the issues. So over on the side of the screen, we've got Net Promoter Scores, which really compares the Net Promoter Scores between some of the big digital banks, so the Starlings, the Monzos, the First Directs of the world, and the more traditional banks. And some of the reason, and this is one of the things I really wanted to be able to cover today, is why is it so difficult for the legacy banks to make this move and replicate the success of the neobanks? And I think there are two big reasons. One is where they're coming from and their legacy operations, technology, and really importantly, culture. Because the second point, and that was kind of the theme of my talk today, it's not just what you do, but it is how you do it. And that is a really key difference between the way that we see the neobanks working and some of the legacy banks working. And I'm going to come back to that later in the presentation. We see really interesting differences on a global basis. And interestingly, this is one of the areas in terms of digital banking where actually, gosh, you know, Asia Pac is really probably the leader in the market with Europe behind it, and US is actually catching up on digital banking. digital banking sort of seemed to start there a little bit later. Lots of different reasons, and some of their current banks are not quite as, don't have quite some of the same legacy problems that we would see certainly in the European banks. So the US market is now catching up on digital banking. Interestingly, the total number of banks with banking licenses that we've seen in the US has halved over the past 10 years. And a really key trend in the US is that we actually see capital and investment moving into non-traditional fintech. So they're moving into organizations that don't have banking licenses and are looking to provide financial services in a different way. The big focus in the US market is the focus on customer value, propositions, and serving each individual uniquely. And this is where you really need to have the ability to do the data analytics to get the insights on individual customers and personalized service. What do we see in Asia Pacific? Asia Pacific is the most advanced digital market. We've got 60% of the global population living in APAC, and there is a very large number of digital natives. Now, some of this is due to age demographics and just a larger number of younger people in APAC. There are also a large number of established non-banks that deliver banking products and services. And what we see in Asia is a different model. Rather than buying organizations to gain customers, they're buying business models and ecosystems so that they acquire the ability to provide the service, and then they load the customers onto that existing ecosystem. One of the things, interestingly, that's really driven this change in Asia Pacific was the regulatory push, where a number of the key markets, so Hong Kong, Singapore, actually specifically launched digital banking licenses and encouraged non-banks to apply for those. And this drove something that was absolutely fascinating, because we actually saw organizations coming together in collaboration to apply for those banking licenses. And we saw some of the banks, some of the traditional legacy banks in Asia, looking around the market and saying, what are the services that customers really want to engage with? And therefore, where should we be putting our partnerships? So we saw the legacy banks partnering with travel companies. Even one of my favorites is a big gaming company that's looking at how could you, if you have a relationship with young individuals who are using your game services, how could you then look to build different relationships with them that will go on through their life? So some really interesting things about ecosystems and how you use that. The other thing, just in Asia Pac, that's interesting and is then this spread out of those services into wealth. And there's a big focus in Asia Pac now to how do you use those digital services to really target the mass affluent and to start selling wealth services to them. And again, this point that the expectation of people of what they get in their personal retail banking, they expect to see that in their SME and their corporate banking. Finally, we come back to ourselves, to Europe, Middle East and Africa. We're a little bit conservative in comparison to Asia Pacific. We do have a very high level of digitization, and there's a very high use of digital payments in Europe. And that's really been driven by current accounts and mortgages. And actually, we see some of the incumbents having advantages here. What we see in Europe is a real focus now on digitization of the front to back journey, and how, again, similar to the US story, how do you make the customer journey specific to the individual? One of the problems that we have, though, in Europe is really how to move away from the legacy architecture and how to transform not just the IT and the operations, but actually the culture and the way that the organization behaves. this slide I'll do very quickly. I mean, the point of this one was to say we were already seeing a big move to digital, and COVID has just encouraged that. And interestingly, you know, some consumers who were hesitant to use digital channels pre-COVID were forced to use them, and that is both on the retail side, but interestingly on the corporate side. We've seen people move to digital channels, and actually they really like them. They've worked well, and they will now stay using those channels as we move forward. This is a really key point that I wanted to make. And as we're working with some of the legacy banks about how do they replicate the success of the new digital banks, of the new neobanks, this is one of the challenges that we really see organizations facing. And the point is it's not, successful digital banks are not just about well-designed products and services. They absolutely have those. But it is both then about how they use customer insight to drive constant innovation across the organization. So behaviors that we would see in a neobank is an absolute focus on the customer and the customer need. They also tend to create this community feel. So there's a lot of interaction between the neobanks and their customers. They will be very quick to pilot products, to test them, to use customer feedback, to very quickly adapt those products and those product strategies. And this point about speed to market, how quickly the digital banks can move, is really important. And this iterative approach. So what we see in the neobanks is that we will see small daily releases of product features with automated testing to make sure that they don't introduce errors and problems. But this is daily. It's not even at the end of a 2-week sprint. So we sort of have a legacy. We have the legacy banks who were used to releasing new features maybe every 3 months, every 6 months. Everybody is moving to agile. But actually, where the digital banks are not even sort of after a 2-week or 6-week sprint, they're doing it every day. And this point about how do you change the culture and behaviors of a legacy organization is a really key point. And is, you know, when we're talking to people in the industry, it's almost that the technology is easy. This is the thing that is really difficult. Where I wanted to end on was actually some really interesting research that we've driven out of the Luxembourg banking market. So we have looked at 74 different banks across different geographies. So this is across Western, Central and Eastern Europe. It's across North America, it's across Asia, it's across Australia. So we looked at 74 banks and 244 different innovations to analyse what is it that the most successful banks do. And this included both legacy banks and the neo-digital banks. And there are these 6 areas that we can see the most successful banks are focusing on. The first is about, it comes back to my very first point about developing the perfect mobile app. Having a really high quality mobile app that is really intuitive, that's really attractive to the customer is absolutely critical. The second thing we see people doing is large-scale use of biometric data, and that is fingerprint, that is iris scanning, it's facial recognition, and that is to allow them to make payments, to make banking transfers, and to use their mobile apps. The third, conversational banking, and it comes back to this point of what has made some of the neobanks really successful is the community feel that they create. And one of the things that, you know, a lot of organizations are looking to replicate, if you look more into sort of the high net worth and the wealth space and even into corporate banking, it's how do you create the sense of having a relationship manager, but without necessarily maybe having the individual and the day-to-day interaction. So this conversational banking is how do you create that intimacy with the customer? How do you use artificial intelligence, machine learning and data analytics to really get insight and to know your customer, but then use that in a way that the customer feels benefit with. And again, very interesting as we look out into wealth and into SME and corporate banking, it's actually using this conversational banking to support the relationship managers as well, and to give them insight.
Isabelle, we need to conclude. Sorry.
Yeah, perfect. Sorry, I'm so excited about the subject. I talk about it too much. So really, the last point, working in strategic partnerships. So it's actually partnering with other organisations outside of FS. I think sustainable finance is actually an area that will drive digital banking. And the last is we're beginning more and more to see this move from retail into looking at the SME end of corporate banking. Thank you so much for having me. I'm so sorry I couldn't be with you there today. I hope to meet you in the future.
Thank you so much, Isabelle. And I think many of our listeners will be happy to have your slides. Can they contact you on LinkedIn to get a sample?
Absolutely, I would be very happy to do that.
Well, you can expect a lot of invitations coming from Luxembourg this morning. So thank you for bringing your expertise on digital banking. It was a pleasure to share this moment with you. Have a great day.
And you, bye-bye. Have a good day, everybody.
Thank you so much. And ladies and gentlemen, we will now continue with our next presentation this morning, entitled Building a Data Science Lab in a Financial Company, by esteemed Professor Yves Le Traon. He's a professor in computer science and systems and software reliability, and also deputy director of SNT. His current research is inspired from and applies to several industry partners that you, of course, well know: BGL, BNP Paribas, Creos, PayPal, SEBI, and others in the domain of IoT, smart grid, and fintech. Please, Yves, the stage is yours.
So good morning again. Okay, the slides are here, and I have this pointer. So, well, yes, thank you for the introduction. So today I will borrow some of the images of the movie of Charlie Chaplin called Modern Times, because I really believe we are entering into a new modern times era. But before I explain a bit what I mean with this title, I will just mention what I think the financial companies, banks and fintech companies are looking for. So typically, first, I think they are really looking to better understand their customers, and for that to somehow interact also better in a more individualized way with their customers and to propose the best product for their customers. And behind this main, let's say, stream willingness, there is also behind that, there is this business strategy which has to be put in place, and for that you need some anticipation of the needs and also of the pitfalls that may occur, and also to predict better than maybe always in a better way the different KPIs. But this also goes together with a risk management strategy, so how to better manage the frauds, the anti-money laundering or whatever, and also resist to some potential cyber attacks. And finally, and behind the scenes, there is also everything that's internal, which is how to increase and improve the productivity by putting more automation and thus better support the internal processes. Okay, so everything falls behind this word of digital transformation, which is mainly data-driven. So when I was asked to give a title to this presentation, I give quickly this title, Building a Data Science Lab in a Financial Company. Then I regretted a bit this title because I was wondering what it really means. And finally, I'm quite happy with the title. The thing which is a bit weird maybe is to put lab together with financial company. A financial company is meant to develop its business, while a lab is typically a group of people who work jointly, more or less, to explore new directions, to discover new things, and maybe to master a new technology, for instance. But when you put that in a financial company, it means that you will work with the financial partner in order to develop this knowledge, this mastering of a given technology. So you may say this is like a research and development department. Yes, but the word that I've chosen, lab, is much more to represent the fact that it's not necessarily a permanent structure. It's something that is meant to start with a certain knowledge and then to reach a better, mastering a given technology and being able to use it within a company. Also, data science, I will not explain the definition of data science today, where I don't have enough time. But today we just pick one big part of data science, which is machine learning, as an illustration of what could be and what could be the activities of a data science lab. And building is really about the fact that it is not built in one day. You need to follow some steps that I hope I will have the time to develop today. So, okay, digital transformation, digital technical innovation. I'm talking here much more about the internal process improvement. So you may imagine that you would like to help and also to replace some tedious tasks done by human beings by developing a useful, personalized, and automated services, which can be either external services or internal processes. And for that, one technology that could be leveraged, that can be used, is machine learning. So just a few words. So again, machine learning, it's something that may mean that we may become eaten by the machine, the machine learning machine. But I really believe this is exactly the opposite. The human must remain in control, and it's really not only a technological innovation, but it's a human-driven innovation that we have to apprehend and to look for. So, but it's true that for a professor in software engineering, that's what I am doing, there is a big conceptual shift. If you look at the top right of this slide, you see in traditional programming, you have human beings, developers, who produce a program, which is then executed on certain inputs, on certain data to produce, thanks to a computer, certain outputs. In machine learning, you have something quite different. You have, especially in supervised machine learning, in this case, you have the data and the associated outputs, and you use a computer that executes a machine learning algorithm in order to produce something that is like a program, which we call a machine learning model. And then, if you connect the two dots, you come to a new process in which the human being is no longer necessary to produce a program that can be executed to produce outputs. So this is something that is quite a conceptual change, but that doesn't mean that the human being is no longer into the control of this process. And that's something I would like to develop a bit in the following. Okay, we call a program, in that case, a machine learning model. So yes, humans are making errors, but as artificial intelligence is doing mistakes too. Mistakes is not the right word. It's true that human will fail in a different way than a machine learning model. First, because the machine learning model is an approximation. Whatever the task is for the machine learning model, it will have a certain accuracy, so a certain power of generalization, and thus comes also a certain uncertainty, a certain hesitation in some cases. That said, in many cases, because of the complexity of the correlations that has to be done, the ML machine learning can really outperform human beings and thus become more reliable than anything a human being can do. So when we work with a company as researchers, so we have to work together with the business and the IT. The business because they know better than anyone what should be developed, and the IT because we need data. And the first things to be done is to have this link between the IT and the business so that we have the minimum amount of data available so that we can start working on some use cases. And then we can put AI, and then we can develop this data science lab. So let's pick a concrete example to expose a bit the kind of research challenges that we are investigating. It's not a complete list, it's just a set of them. So typically, in most of these financial companies, there are fraud detection systems. A fraud detection system typically picks transactions, and there is a rule-based detection system, rules which have been written usually by human beings, which will raise alerts for the suspicious transaction. Then there is a human being who will take the decision whether or not to block this transaction. So what we can immediately think to do is to develop a machine learning-based detection system, which will exactly follow the same process. Except that in this case, the human being will have to understand the outcome of the machine learning model, and no longer for a rule-based system, before taking the decision. And ultimately, this is an extreme case. There are other intermediate steps. It will be the full replacement of the human being by a machine learning system. So that is, let's say, the big picture of the things that kind of evolution from one stage to another one. And it raises a couple of challenges for which is of interest for research. So the first one is the accountability. So it's not specific, it's not a topic of research only for IT researchers, for people working in computer science or so on, but also for the legal people working in law, I mean, researchers in law. But accountability usually comes with the first property, which is the capacity to understand how the machine learning works, which is called usually explainability and interpretability, which are two slightly different notions. Then, because these models do not work exactly like a classical program, they may be attacked in a different way than a classical system. In machine learning, we tend to call that robustness, but we could call that security also. So the capacity of the system to resist to new crafted, let's say, attacks that may make the system fail. And finally, but even more fundamentally, one key point before even adopting such a technology is to make it correct. So the question of correctness is, of course, a very important point. Okay, I have a couple of minutes left, so I'll continue. So when we develop a personalized service, for instance, I don't know if the feeding machine, so we had the machine that was eating the human being in this movie, and now we have the feeding machine, which is supposed to increase the productivity of the employees. Of course, it has to be useful, it has to be personalized and automated, but it has also to be correct and robust. And if you remember this movie, it's not exactly very well done. So, correctness and explainability. A few words to explain what is at stake, because I think it's important to get a bit this why we need research around this. So you probably already know this image of this deep learning, deep neural network, which processes many images, which learns how to distinguish a wolf from a use key. So, and what happens, and this machine learning model, after a lot of training, is doing some mistake, and one of them is this use key, which has been classified as a wolf. And which means it's incorrect for this input. And when we look at that and we look at the explanation is because in most of the cases, the dominant feature that appears, that correlates with a use key, is the background of the photo. Most of your use keys have a green background in most of the photos, and most of the images that we treat. And thus, explainability is very necessary to understand, because the way it thinks, if we may think say that, is so different from the way a human being will perceive such an image that it needs to be understood. And you may say this is specific to image processing, but it's not true. It also applies to any financial service which is based on machine learning. For instance, in the case of legitimate versus fraudulent transaction, you may also have problems of correctness and explainability. And today we have tools that helps in this explainability. We have tools for visualizing complex data sets. For instance, here are just the data with colors and clusters, but we are still far from something that is, let's say, human readable. Security or robustness. A few words about this. Again, it's not a secret. It's very well known that with, again, taking image processing, if you take a use key which has been properly classified as a use key in that case, and you put a little bit of noise in the background that no human being can perceive, you make it classified as a wolf. And again, this problem of adversarial cases, so we can generate adversarial cases, applies to any other case of machine learning system, and also those who are from the financial sector. Which means that we need to develop a specific research with the company to generate and defend against these adversarial cases and robustify the machine learning system that will be deployed. Finally, this impacts also, I mean, I like the previous talk because it's important also for the adoption to become familiar with those technologies and slowly and surely, I don't know, but slowly to be able to master those technologies and to integrate that in the IT practice. So here it's a classical continuous integration process where the human being at the bottom continuously produce code which is validated through automated step and then put into operation. So we also work on this methodology to have a smooth pipeline. But when you start to put machine learning, develop machine learning systems, this means that you need to also add, first you remove the human beings, except the one who is under control of this loop, which is on the bottom, and you have to put explainability for this. So this human being will have to tune, these human beings, not only one, will have to tune the model. We will have to equip this process with a couple of capacity to detect deviation from the expected behavior. And finally, we also need to put in place the how and when to retrain the machine learning models. So it's a bit technical, but it's just to show that this means that we try to create a continuous pipeline so that developing new services will be smoothly done. So finally, the key steps are quite simple. So the first one is really a preparation steps to build a data science lab. It's working together between researchers and people from the company. We need to first work on concrete use cases. And for that, we need to have some data available, as I mentioned, which usually, in many cases, requires some work on the technical depth and how to have an easy access to the key data. Then we can really develop use cases and start to accumulate knowledge and start to improve also this methodology and this kind of internal processes. And here we already have a data science lab. And after a while, we are entering to a continuous improvement loop where we can more easily and more continuously deploy and evolve, this is the more difficult, those machine learning systems and these financial services. So, for instance, by providing automated repair solutions to detect the deviations, the attacks in a more systematic way. And maybe it's not an objective as per se, but it can be for a sub-part of the business. After, when we accumulate enough knowledge and enough data, we can start thinking it would be good to explore some scenarios, hypothetical scenarios for a certain perimeter, and then we will have something that could be called a digital twin. So, yes, I still have 10 seconds. So I will conclude. So in short, the nice thing with this data science labs is really to test and innovate together with the company, and to while we bring our expertise and the company remains the expert in its domain, to reach that level that I mentioned. And that's really what we want to do at the S&T. This research center is really to develop and support the financial sector by helping and supporting the development of innovative digital financial services, and also attracting talents for doing that. Thank you very much.
Yves, thank you so much. This was absolutely fascinating.
Thank you.
Have a great day. Please stay with us. It's time to greet our next speakers for the first roundtable of the day. And the subject of the discussion is banking innovation in the age of digital disruption. I've heard that somewhere before. To discuss this topic, our moderator, Nahil, Hanna, Head of Innovation and Startup Ecosystem of Unbound Innovations MENA, will have the chance to count on Jason Maude, Chief Technology Advocate of Starling Bank, Vilve Vene, Estonia's serial fintech entrepreneur, CEO and co-founder of Modularbank, very famous, Olivier Crespin, co-founder and CEO of Zand. Okay, so on stage, we will welcome Nahil and Vilve, and remotely we have Jason and Olivier. Please welcome them. And everyone is here, so the word is yours.
Hi. Good morning, everyone. So, as we leave behind the last decade and enter the new, we are faced now with an access point. In this session, we will reflect on how digital technology is changing the way banking functions operate, creating the need for bankers professionals to acquire the right skills and having the right tools to face the challenges of the digital world. The last decade started in a financial crisis, a scenario which catalyzed a breathtaking number of technological megatrends. We will discuss how this crisis yielded products and services that revolutionized our financial lives. We will also discuss the various global challenges we face today before looking forward to considering how our current situation, the last decade megatrends, and various emerging technologies conflate to reveal the next decade of fintech innovations. Olivier, let me move so I can see you. So Olivier, Jason, and Vilve, thank you for joining us. I'm gonna start with the lesson learned. We all know that the pandemic had many downfalls, but the only positive impact that we had is we all realized that digital transformation needs to move fast, otherwise we'll be left behind. Despite that, we know that innovation is not in the DNA of any bankers, basically. So what's your thought on that? Olivier, I'm going to start with you.
Thank you very much, Nahil, and really pleased to be here with you in Luxembourg. In fact, sorry I'm not present in Luxembourg, but I say hello to all my friends there. So yes, we have seen an acceleration, I would say, over the last 2 years on it's like everybody went on a fast course on digital. You can see people, even older people, right, now used to QR codes, be able to register to many applications online, trying to become more and more familiar with everything digital. So we experience here as well as, Nahil, right, in Middle East, and I guess it's the same in other parts of the world. In fact, my parents in their 80s, I think they learned so much, right, over the last this crisis, how to use better mobile phone. So we see a lot of acceleration on this. We see as well a lot of needs to get remote access without a physical presence. So you see people tend to avoid not to go and visit branches in banks. People are really looking to do things easy and simple. And as digital is offering this, I think it is a natural switch to more digital usage, including banking.
Thank you, Olivier. Jason, I think you are in UK. Was it the same?
Yes, yes, absolutely. Thank you once again. I would also like to much prefer to be in Luxembourg speaking to you in person, hopefully soon. Absolutely, we've definitely had a crash course in digital. I think what many people have learnt over the past year is a principle that Starling Bank has really inculcated, really brought into its core, which is that you need to move fast, you need to innovate in order to keep up with things, but you can't do that at the cost of the stability and security which you need to run a bank, right? You can't have these two things in balance. We're often describing them as if they're in balance with one another, and you can't move one up without moving the other down. And I think what Starling has really learned, and what we've really tried to practice, is that these two things can't be in balance. They have to be mutually reinforcing. You have to build a system where you can innovate, and your innovation doesn't come at the cost of stability and security, but instead it enhances your stability and security. And that's the only way you're going to get around this resistance to innovation, which is indeed in the DNA of all banking professionals, all finance professionals generally, because they see innovation as the enemy of stability and security, something that lowers it down. And you have to build a system that allows both of them to be achieved at the same time.
Exactly. We're trying to change things. Hopefully we'll manage to get there. Vilve, I think you do banking as a service. So from your point of view, what do you think about the mindsets?
Yeah. Is it working? Yeah. Yeah. First, I'd like to thank you for inviting me. And I'm really excited to share my thoughts. But a little correction, we don't do banking as a service. We provide technology for banks. we are core banking technology providers. And pandemic, what I saw is that it really made many banks to realize that it's not enough to build digital channels, to build nice apps, because in one moment, there were many people doing their banking at home, and there were people who lost their jobs and couldn't pay anymore back their loans and applied for grace periods. And what happened? All banking systems were overloaded, overcrowded, and people had to wait answers for weeks, even for months. It was a big mess. And what banks learn from that is that it's not enough to build beautiful channels, to be shiny ones, but they really have to automate their backend processes end to end, and really use the data they have immediately. And for us as core banking platform vendor, it was very good sign, because banks started to realize that they have to do something with their legacy core banking platforms. But if I'm looking to the market now, I still see that the understanding is there, but steps to move further are still a little slow, and decisions are really hard to come. And that's, of course, we all know that core banking platform, it's the basement of the bank, and there is the question of risk always. Take the risk or not to take the risk. But I really hope that in the near future, also C-levels of bank guys on the banks start to understand that not changing is the bigger risk than changing. Thank you.
Thanks, Vilve, but I think we'll get there, and we all realized that the pandemic did change things faster than before. So now it's a pain point for everyone, especially when it comes to financial technology, it's the regulations. So I'm gonna start with you, Olivier. If I remember well, like since 2018, you are trying to register Zand in the UAE. So tell us a little bit about the regulatory aspect there and why it's taking so long.
So, yes, so I've been since 2018 when I started alone, right, the bank in UAE. As you know, in UAE, there is no concept of digital bank. They don't have a digital bank license, so we needed to apply for a full bank license. That means that the license we are having now is a license that allows us to go to any product similar to any existing bank. So it takes time, because obviously before giving a license, UAE Central Bank needs to ensure that we have a full organization that is ready to run a bank. So we went through a lot, and we are going to launch both retail and corporate banking at the same time. So I have to get to be able to get everything ready, including process, policies, operating standards, and so on, and technology builds. Obviously, I need to assemble a full team. So I have cyber security, financial crime, risk management, and we had to present ICAP, capital adequacy plan, ILAP, liquidity plan, stress test on our portfolio on a corporate banks that we don't have yet, because we don't have any client, but the stress test for the next 10 years. So it takes some time, right? So on top of that, we had a review, obviously an audit of central bank, which takes some time, and it's normal again. And it was not held because we had COVID. So because of the limitation of being able to do a physical examination, they got access to all our system process, etc., through an enterprise architecture tool we have created. So it was a long journey. Now we are really in a final stage. The central bank is okay and supportive. So we are incorporating the company Zand right now, and we expect to be live in the next couple of months. Okay, so that's why it took time, and also because it's the first time in I think 20 years that a new license has been given in UAE. And by the way, people are asking why, if there are already 52 banks in the UAE, why are we getting a new license? In fact, it's because to be able to support the digital agenda of Emirates, United Arab Emirates, the government in both Dubai and Abu Dhabi understands that digital bank, native digital bank is needed. In fact, a digital bank, the way we describe ourselves as well, is a platform with the banking license that is able to connect to ecosystem, right? To be able to provide services when needed. And the second aspect of it is as well, we have built a very strong data platform will help us to optimize the service we can give to both retail and corporate clients, ensuring that they have access to the best product, and we are able to define very clearly the risk to be able to give them the best rate on their loans, for example. So I stop here, but that's in a nutshell where the time it took and why we also got the license.
Thank you, Olivier. Yeah, it takes time actually for regulators to follow, especially when it comes to digital aspects. There is always a risk. Yeah,
so Nahil, in fact, because it took obviously longer than expected. We have not wasted time. So initially we were planning to go live with retail, but because we have completed the retail build and so on quite early, we embark in building the commercial banking side. So even if we are delayed at the beginning, we are going to catch up very fast going forward.
Thank you, Olivier. Jason, in UK, how is it fast to set up a digital bank?
So it's reasonably, it's never easy to set up a bank, but it's, there is definitely a path to setting up a bank that the regulator has provided. The regulator's key concern in the UK, at least, is that in 2007 and 2008, when the financial crisis happened, banks were on the verge of collapse, and they couldn't collapse. They were too big to fail, as the lingo goes. The government had to step in and bail them out. And the regulator's overriding concern since then has been to make sure that the next time there is a financial crisis, they can let banks collapse. If a bank starts to go under, they can say, well, we'll help you, slowly go down and move all your customers on and that sort of thing, but we're not going to bail you out again. But in order to do that, they need to make sure that there isn't a bank in the economy that is too big to fail. And the only way to do that is to make sure that there are many, many banks, more banks in the economy, and that each one of them, none of them has a huge share of the UK economy or customers. So they've provided a pathway by which new banks can appear and gradually get a license by getting a partial banking license that allows them to do some things with a limit and a cap on their deposits, and then when they're ready, go to a full banking license. And that is the pathway that Starling Bank followed, and that other digital banks have followed as well. So the regulator, like most regulators around the world, is still catching up on new technology. What does it mean to have a fully digital bank? What does it mean to have a bank that incorporates technologies such as machine learning and AI and so on? They're still trying to work out the finer points of how that can actually be regulated sensibly. But I think in general, the regulatory environment is good, and the regulator understands that banking needs to transform and wants to help it do so and encourage it to do so.
Thank you, Jason. Vilve, from your expertise and perspective.
Yes, I'm probably looking regulation from a little different point of view, because we as technology providers, what does it mean for us? And there is one thing you have to keep in mind, that regulations are ever changing. It never stops. And that's why when we started to architect and design our platform, Modularbank platform, then first thing we kept in mind is how to build it in the way that we can be changed, can be follow all those ever-changing regulations. And it's a lot about taking GDPR, taking PSD2, taking all those AML topics. It's about data, actually, how you keep your data in the platform, how you organize your data, and how are you able to store more data points, etc. And I think that's the key factor to build the good modern platform for banks that fits to different countries, different organizations.
Great, thank you, Vilve. Maybe next step will be to move into a native digitally regulations. Who knows? Yeah. So the next point, we're going to talk about talents. We all know that now the skills are changing within the banking systems. So you don't need to have a banking background in order for you to be part of a digital bank. So Vilve, I'm going to start with you. So what do you think from your perspective, like about the skills, the talents that a digital bank needs now?
Yeah. If we're talking skills, of course, it has developed so much. But if we are looking to incumbent banks, still the organizations, how those organizations work, that's still all the same. And what I miss is that if I look into the C-level of the banks, I really hope that in next 5 years there will be much more tech-savvy people, and also from organizational side, and that's also for new banks, new digital banks, I think, because when organizations are growing and maturing, it's very often that they lose their agility, and I think extremely important is that nowadays there isn't in the bank anymore the big IT department, that really takes care of technology, architecture, etc. Because the technology is now in every department, in every function actually, and if we are talking about strategic decisions, I already mentioned this is related to core banking technology and changing the core banking technology in incumbent banks. It really needs that it all is coming from the top of the bank, and you actually can't delegate your future to consultancies or to your IT department, because IT department is always it just wants to keep the status quo, and consultancies, they don't take responsibility for your business, which means that only the top management of the bank can take it and bring it to a whole organization.
Thank you, Vilve. Olivier, I know you have like an intense banking background. Do you think you needed it to set up the digital bank, or you needed to shift your skill or scale it up? What's your experience concerning that?
So it's a very good question again. And I'm go back to what Jason mentioned about the DNA and the balancing. So what you have really is, digital bank, you have bank and you have digital. So what you need to balance is a DNA of banking, which is around risk management, about compliance with regulation, about trust security, which is really what the central bank license is giving you, and you have to protect it because it's what is going to differentiate yourself, right? People need to have peace of mind. They need to make sure their money is safe. So for this, you need people who are coming from this kind of area, particularly in area like risk management, compliance, and some business, particularly on the corporate side. But you need people who are ready to change. And for example, my head of risk was a head of risk in a bank before, but he's also a computer science degree from Berkeley. So yeah, it can understand data and it can understand how you bring data into managing risk. You need as well people coming from the DNA of digital, and digital is about customer centricity, better leverage of analytics, and leverage the latest kind of technology. So for this, we have brought in people who have coming from Google, for example, the head of data analytics and data was the head of Google Middle East business development. And he has built from scratch the data platform and the analytic platform for the bank. We bring people coming from Virgin Mobile. We brought in people coming from a very advanced technology company to be able to build. And myself, some people like myself who are like kind of hybrid people, because I grew up with Citibank across many different continents, and I've been a traditional banker for some time, but for over 20 years. But over the last 8 years, I had the opportunity to start building digital banks. So I launched a bank for DBS in India, Indonesia. I launched another one in Vietnam, and got some started in Thailand and Philippines before I moved here. So I think you need to get in a bank different kind of skills who complement each other, and we're able to bring the best to people. And having obviously experience in banking can help, but under the condition, you can understand very well the technologies, the data, and so on. So you need to have, I think, a very complementary. And I will look at as an example, a CEO of DBS Bank, which is, according to Euromoney, the best digital bank in the world. I started digital banking for DBS, and is where we were named first time as best digital bank in the world. Piyush Gupta, as the CEO, understand very, very well technology, data, platform. So all the conversation around management committee, like it is here in Zand, even if you are a smaller organization, is about job to be done. What is it for client? How do we measure what we do? How we can add value to people, and so on. And going very deep on discussing the technology, and particularly ensuring that we respect our guiding principle in terms of technology architecture and data analytic architecture. So I think the skills are evolving, and you will see more and more CEO of banks, of traditional banks, will have more and more understanding of technology. And we see a shift. If you look at the management team, you have a cybersecurity is really important, data designer, product designer, designer. And these are usually people who have more difficulty to bring into a traditional bank, because it's very, the corporate organization may be heavy, and you need to be ready to create a specific structure for them, and making sure that they can have roles and sit at the table. The designer, right, is one of the top job in the organization, and so you see a shift, right? You see a balance. In fact, before it was not balance; it was all about banking. Now it's like you see it starts seeing a balance between digital and banking, and this is an equilibrium we need to maintain all the time.
Thank you, Olivier. Yeah, before it was all, I think, about old school banking. Now we need to scale up, I think, the existing talents and mix it up between the old school, and at the same time try to scale the talent up with the new technologies coming up. Jason, Olivier didn't set up the bank yet, so he's in the process of doing so. From your point of view, because I think you're an award-winning bank for a few times so far, mm-hmm. What did you learn about the skills, and what do you need exactly internally for you to be successful?
Mm. You do definitely need this mix, as has been said, of banking knowledge and technology knowledge. That is definitely something that Starling has benefited from, having people who have long histories in both those fields, who have seen the pitfalls in both areas, and are able to steer people around the pitfalls and guide us. So that's definitely one thing. I think what is key is that as we move into this sort of more new digital era, obviously technology skills and the ability to create technology is going to be incredibly important. But in order to get and retain those skills, what you need to have is the right culture within your bank, the culture that is agile in the original sense of the word, rather than agile in the agile manifesto sense of the word, I should say, rather than just agile and fast moving, or agile as in some methodology that's based on agile in the sense that you really want to get stuff out in front of the consumer, right? Whenever an engineer comes into Starling Bank, we aim to have code they write be in front of the customer or actively helping people run the bank within a week, right? We really want that to happen within a week of them starting, because we really want to inculcate this idea that they are not just going to be sitting at a computer for 3 months typing away with nothing happening, that they really are going to, everything they do is going to very quickly get in front of the customer, get in front of the people who are running the bank, and help them do their job, or help them, in the case of the customer, manage their finances and live a good financial life. And it's that attitude that you need in order to keep the skills. That's what engineers want. Speaking as an engineer myself, that's my background. I have worked in jobs where I have worked for months and months and months, and sometimes even years, on pieces of code which never go anywhere, because managers are sitting around discussing, is it the right time to deploy this yet? And they're looking at a Gantt chart on a wall and sort of stroking their chins and thinking, and the code never goes anywhere. And I don't want that. I don't want to just write beautiful code that sits somewhere and doesn't do anything. I want to write code that goes in front of someone. And banks are going to increasingly find that getting the digital skills they need is going to become harder and harder unless they adopt a system and a culture in which the idea is you write something, you put it out there. And not only you write something and you put it out there, but you have designed a system in which that is safer, that is less risky than sitting there for 6 months on a batch of code which all goes out once in a big bang. We have seen numerous IT failures occur at big incumbent banks when they have sat there writing code for months and months and months. They've got however many man years worth of code sitting in a repository somewhere, and then they press a button to release it and it all explodes and leaves them with large amounts of reputational damage. And I think so from the customer's perspective and the perspective of the technology savvy employees, it's going to become more and more important to move to a culture where you can deploy fast and deploy safe at the same time.
Thank you, Jason. So being conscious of time, we're gonna do kind of conclusions. I'm gonna start with you, Vilve. What do you think the elements are for the reform? And you as a female in a dominant male environment, what do you think we need to change, and what the reform should be?
There are very different aspects. One aspect, of course, is that I think that time has come that banks have to start trusting technology providers, because building modern technology, modern services in-house, it takes time and it's costly. But the main thing is that you might not have right expertise. And if I'm looking back to my professional history, me and my co-founders in Modularbank, we have been building and transforming big banks, large banks in Nordic, starting from 90s. And it means that every time we did it, we used our best knowledge and best technology, most proper technology available on the market at that time. And it means that now when we put all this experience, skills gathered over the years to Modularbank platform, it's already generation 5 or 6 of core banking technology. And then there is question that have banks really to start from level 0 and do all those steps again, because it's time that is the most costly. Yes, and then your other part of your question, it's always when I'm speaking somewhere or giving interviews, it has been asked that how it has been to be female in this very male dominant business. And of course, I have had funny stories that, for example, starting a business meeting, one visitor, one guy asks me to bring a coffee because I'm the only woman in the room. But I really didn't let to bother myself. I just brought a coffee and started the meeting. But overall in my professional life, I have been working all the time in teams where everyone is valued on their skills and their ideas and what they can contribute, regardless of their gender. And that's I mean, something we have to bring to our companies. And I follow this philosophy in Modularbank as well, that because there are so many wonderful women around, and if we lose these capabilities, actually we lose part of our business.
Thank you, Vilve. That's all the time we have for today. Thank you, Olivier. Thank you, Jason. And thank you, Vilve, again for sharing your expertise. Thank you.
Bye-bye. Thank you.
Thank you very much for this captivating conversation. And you all had very interesting learnings this morning on digital banking, so I hope you took notes. Let's now change direction with a practical case study on life insurance as an investment platform, because yes, insurance is digitized as well. In this frame, please welcome Eric Bemelmans, moderator for this roundtable, who is Director of Digital Transformation at Vermeg. He will be joined on stage by Abraham Takom, CIO of Lombard International Insurance, David Lieberman, Head of Distribution and Sales Innovation and Head of French Market at Lombard International Assurance as well. Gentlemen, I'll let you go on. Welcome on stage.
Good morning. Thanks to be here. So indeed, we'll talk about life insurance and transformation, and to see why we can talk today about a practical case study that I need to stay close to the mic. Indeed, how we did it concretely at Lombard, partnering with Vermeg. Maybe a few words on Lombard International Assurance. So Lombard is a leading provider of wealth and structuring solution based on insurance products, distributing unit-linked products all over Europe. And for the last 30 years, this is our 30th anniversary this year. And indeed, technology, digitalization is not just a buzzword for us. We've been ongoing deep transformation and involved in changes for many years now. And today we wanted to share about why technology can be a challenge when you want to develop new features, new functionalities internally for our clients, for our partners. And indeed, we took this example of the investment platform. So before going more in details into the project and how we run it, maybe a few words on how we are today involved in transformation. And the recent example is how we manage digitalization, dematerialization. That is indeed, in our words, something that is an efficient way to deal with our partners and clients. Moreover, when we manage hundreds of pages to sign a contract, and when suddenly happen a lockdown situation all over Europe. So we already had the chance to introduce transformation through technology recently. And while we were experiencing this success internally and facing the challenge of transforming our business, we pursue the road with the project of an investment platform. So indeed, what we want to share with you today is the challenges, the journey we are facing for implementing such a project. And to begin, please, Abraham, can you tell us a bit more about this wider initiative of innovation and transforming a business such as life insurance?
Thank you, David. Hello, everyone. So basically, distribution channels are vital for our business. We are constantly listening to our partners and clients with the aim to improve what the services that we are providing, and also to take into account evolving needs that they are having in a regular basis. From the observation that we have a diversity of partners, we also have a diversity of systems being used, a diversity of data flows being used to serve those partners. We had the idea to streamline all of those and also to bring more automation, because it's not always straightforward to get those operations correctly managed. For that, we launched these investment platform initiatives with the aim to provide to our partners and clients a digitalized investment platform that will enable them to more efficiently manage their investment in both what we call specialized assurance funds and external funds. It is clearly a transformation of our business to enhance our value proposition for our partners and clients.
Thanks, Abraham. Indeed, we need to understand better the approach we had to develop such a project. Can you tell us more about the way we approach such integration to manage the investment platform project?
Sure. So we all know that business and technology are mutually reliant. We also know that we need to take into account the different aspects of a business in order to transform it. This is why we took the approach of having a cross-functional team to manage this initiative, this critical initiative for our business. What does it concretely mean? It means that within the project team, we have representatives of all our business departments across the value chain, from the front to the back office. We also have all the supporting, let's say, services represented in the business in this initiative team. The value we gain from that is that we take into account all the aspects at the same time. We don't have a siloed approach anymore. We are addressing the concern of all our different business units all together. I would say the second structuring aspect of our setting is the agile approach that we have adopted for this initiative. Basically, it means that we are putting the business first in whatever we are doing. We always start with the why. Why do we want to do it? What is the expected final value? And then we work backwards to see what are the components we need to put together to reach to the final result. And I will say the main benefit that we are getting is that because we have those cross-functional teams, the agile approach enables us to get them quickly adapting to the changes that we are impulsing. And we are also delivering quickly small results thanks to that, because we are all in the same room. It's not like we used to do in the past, where you have the business in one silo, IT in one silo, and sometimes the two can discuss in a desynchronization mode. We are thanks to that approach, even my team, the IT team, the way we are delivering today through small sprints is a really gaining approach for the company.
Maybe another why to be answered is from the moment we set the goals and that we coordinate the approach internally, why partnering with Vermeg? How did we come to the point where we select this partner to execute the transformation for the investment platform?
Yeah, when we have good people, as it is the case for me, I have a good team. I have talented people working for us. The temptation is always to try to build in-house. For us, it wasn't an option to get this investment platform entirely built in-house for two main reasons. The first is that we wanted a speed to value. We all know the constraints that goes with building solutions in-house. So we knew in advance that we couldn't get that speed if we have chosen that option. The second reason is we didn't want to distract our internal people from, let's say, the main critical task that they have with our core business systems or processes. So we wanted to find a modular, adaptable solution that will cover about 70% of our requirements, and that will also enable us to interconnect the existing systems that we already have. And for that, we went through a RFP. We have met quite interesting companies with really interesting proposals. And Vermeg stood out because they have not only the answers they provide to our RFP was quite convincing, but also thanks to their track records, supporting companies in similar projects. And also they are building their own solutions. So that was a main reason why we have chosen to work with Vermeg.
Thanks, Abraham. Eric, maybe can you explain us more concretely what is Vermeg's role in this project, and maybe before that, who is Vermeg?
So, thank you. Good morning. So, just a few words about Vermeg. Vermeg is a specialized software house for insurance, banking, wealth, and capital market. So, beside our software package, we created a full value proposition for accelerating digital transformation with a low-code platform, but also low-code and no-code business component store. And in that sense, we help our clients to go to accelerate digital transformation from a business angle by providing those low-code, no-code business component. Concretely, with Lombard International, we provided business component modules coming from our Starling suite to build or to urbanize the digital the investment platform. But not only business component, because we are also providing project management to run the project. And also we provide experts. So we have a team of experts in insurance, but also in asset management that responds to business, help to configure those modules to answer the business need.
Thanks. Maybe a quick word on the why we're talking about an investment platform when it comes to a life insurance company. Here in Luxembourg, indeed, one of the main benefits for a Luxembourgish insurer is indeed a super wide and flexible investment universe based on regulation here in Luxembourg. And it means that we have many counterparts to deal with, many flows, many transactions, and this needs to be rationalized and needs to be coherent, consistent with our business development. We are working with more than 1,000 counterparts as investment managers, custodian banks, distributors, brokers in more than 12 countries in Europe. So indeed, the rationale behind the development, the strengthening of an investment platform is based on the business, as Abraham mentioned. So the idea of the support of the technology and what it takes for a wealth-regulated entity as Lombard International is about the systems. And indeed, we can see that from a 30 years legacy of development of system, we do believe that we have some challenges to adapt and to enable such improvements, such transformation. What does it take from the insurance perspective?
Yeah, I'm sure that those in the room who are used maybe to technology area are going to know the challenge I will mention. When you want to innovate, you also have to deal with your legacy. In the case of Vermeg, we are relying, especially for our core systems, on really old systems that most of them are more than 20 years old. And it's not always easy because we have all those systems interacting together through a really complex architecture. When you want to build on top, yeah, obviously replacing those systems wasn't an option at all because we know what it costs to replace systems. So when you want to build a new system on top, you face different issues related to the integration mainly. That was one of the main issues. The second issue is regulation because we are operating in a highly regulated sector, which means that sometimes the technology choices that you want to make are sometimes, I will not say forbidden, but you cannot easily take that way because it is quite complicated. And you always have to find tweaks to bring to life the transformations that you want to execute. So those were the main challenges that we faced in this transformation.
And from Vermeg side, you are experienced in implementing such a solution, but in this project, concretely with us, what were the main challenges on your side?
So as you mentioned, we can highlight challenges around integration, having the right API, having the right approach and the right roadmap to urbanize. This is a word I like to use because, as Abraham mentioned, we don't want to replace what is existing and what is working, but it's really urbanizing around existing system. And it's key to have that vision and see how we can enhance to create the platform. So this is also where modules coming from Solife really suits that approach, but it needs to fully integrate among the roadmap. Also, even if you have done, and this is one of the key aspects also in the collaboration, is we do a phase of pre-study to identify all this issue, the risk, and have a plan and a step-by-step plan. But even when you go and do those step-by-step plan, you always face a new issue and you need to constantly adapt on the approach, but also adapt on the way we configure the modules that we are providing. So this is also some key challenge. But the collaboration and the agility we have is a way to move forward.
So I think we have a slide to share, to highlight and to illustrate the way we manage swiftly the integration of technology in this plan. I think it should appear, replacing our nice faces. Yeah. So Abraham, can you describe us a bit more in details how this transformation is impacting already the harmonized architecture that we are relying on, and how we are managing the development, and what are the next step in terms of impact and benefits for us internally, but also for our partners and clients?
Yeah. So because we had that architecture, complex architecture that I described before, we needed to find a way to integrate the new developments, the innovation solutions that we were building. That couldn't be done without a deep revise of our architecture. So we have decided to adopt a microservice architecture, which enabled us not only to transform some monolith systems into microservices system, but the most important added value we gained from that microservice architecture was the easiness for us to split the work in small pieces so that we could have several teams working in parallel to bring in small increment the different part of the work that we wanted to do. So our value is being delivered, and the business is seeing the value that is being delivered even though in small pieces, but they can see it, which contrasts with the old way of doing, where we have everlasting projects that will be delivered after years. And when they are delivered, we have some complaints from the business. So that is one of the key changes that we brought. I will also say the adoption of the agile approach did help because to get some changes, you need also the mind to be agile. You need some flexibility in the way people think the project. And because we had already adopted that way of working all together, we could change on the business side some of the conceptions they had of IT. We could also change within IT some conceptions that some of our colleagues had regarding how we should be managing our architecture. Maybe Eric, because we did work together on that area, I will say the API, the implementation of API was also key to get the architecture you can see, where we have the solution provided by Vermeg that is integrated in the landscape. If we don't point it out, you will not even notice that we have different varieties of technologies integrated together, which is more thanks to the API work that we did with Vermeg. Maybe Eric, you can add on that.
I think I would add also having a 3-layer or multi-layer architecture like it was built is very important, because as you mentioned, the core system, they don't move at the same pace that channel will move. So it's important we decouple. And the focus has been primarily made on the core components and building that investment platform, the modularity. You talk about breaking silos in the company, but also you break silos in your architecture, because we created an API that address fully I would say the full spectrum assets and liabilities and providing the service. And then on top of that, now you're focusing on business, deploying your business process on top that is stable and strong investment platform. And then now keeping the roadmap, it's delivering the channel to address your distribution partners, clients, and internal users. So this is a very good approach and a very good blueprint architecture to urbanize an existing system and get agility to have the full agility to deploy your process and your value proposition on your distribution channels.
Yeah, I will just add one thing, David, is that because across the project, we are somehow disrupting the way our internal people work. And in order to be able to do that, you need the support from the executive team. And this is something we got, and it is crucial because we had a top-down buying, and the message could be easily conveyed to the different teams. That was also quite important for us to be in the position to execute.
I would add that it's as top down as bottom up, because then what is crucial is the adoption in such transformation of these new processes internally. And I guess one of the ultimate challenge when it comes to such a change in processes, in tools, in software, is the adoption by the internal users first, and then external. So I guess transformation by its own, if it's not used, won't be a success. So the part where it's about testing and really coaching the main benefits, the adoption of these new processes is a criticality to the success of such a project. If we want to translate this example of the investment platform concretely into our business, into our product, I would say, is that we need to consider that life insurance is also changing a lot from maybe a product to a platform of service. And we need to remember that our product is not a product. It's each time a blank page, as I said, with multiple counterparts, with each time a new scenario that we are facing from. I mean, it all begins with the client's objectives, and each time it's a new scenario that we need to build. So why technology is an enabler, sorry, it's because it helps us to standardize something that is not meant to be, meaning tailor-made and optionalities that each time is creating a new product, a new service for our clients and distributors, and hence why the technology here is really needed. Otherwise, if we would have kept this architecture of silo, it's preventing us from being able to provide the right answers. Moreover, in the current world and in the current situations that we faced. And needless to say that talking about investment today, when it comes to execution and speed and live and managing several financial underlyings, quoted or unquoted, the accessibility, that's something that is the whole meaning of digitalization for us, being able to interface, to offer a live and secure access to our clients, to our partners, but also internally, is the main purpose of this project. Maybe one last question. We hear in a Fintech Summit, how much this investment platform project for an insurance company is innovative, is bringing something more to the table. Abraham, from the insurance company perspective, how much are we innovative?
Yeah, I think innovation, sometimes we have a perception of innovation such as bringing something that doesn't exist. And with this project, we are innovating, basing our innovation mainly on existing systems and technologies. So we can also innovate without changing everything. That is something that we have also learned while doing. A concrete example is one of our systems that we were using to serve our clients and partners. And thanks to the different exchanges we had with our business and technology teams, we realized from the change that we wanted in our business processes that the same system could be used to enhance the way our operations, our internal operations were managed. And this is how we came with the idea of a single input systems for our business. But we didn't create a new tool. We have just repositioned a tool that was used for another purpose. And we used that tool to serve a new need that emerged during the project discussions. So that was one of the, I would say, cheapest innovation, because we haven't invested that much, only our time. We spend a lot of time chatting internally, sometimes long discussions, but at the end, we reach out to an innovative solution that is based on existing tools.
And you, Vermeg, you are bringing the innovation in a way. You are bringing the speed, the scalability, the tool to be, I mean, more innovative from our perspective. In such a project, facing our challenges, our requirements, how do you manage to be more innovative?
Yeah. So coming from a traditional software provider working at back offices on insurance or wealth management with Soliam, for us, also the innovation is really to be part of that digital journey because there is not, we don't have the same project in all clients. Each client has specificities, and so we need to tailor what we propose to what is requested by the client. So in terms of, I would say also innovation, or innovation we bring is to have our software being modules and contribute to the now more front office distribution and really be part of this, I would say, state-of-the-art architecture and also business need you have to support your strategy. So this is also for us, if we talk about innovation, a way to serve our clients.
I think the word journey illustrates pretty well what we engaged into, because even if it's projects, transformation is part of a long journey, and I would say that our final word is when we engage in such project is what is the next step, what's coming next, and I think it's a journey definitely needed, but a long one. Any question?
They are surprised.
Yeah. Thanks a lot.
Thank you.
Thank you.
Eric, Abraham, David, thank you so much. It was great to have a case from the insurance world compared to all the neobanks. We've heard too much about the neobanks, so this was really great having you from Lombard Assurance. Guys, we have a 5 minutes advertising break now, and we'll go to Nigeria after that, so stay with us. And we are now leaving Europe to go to Africa and to one of its most vibrant countries, which is Nigeria. So let me introduce Olusegun Adeni, Chief Digital Officer of Wema Bank. He's with us today to speak about the path to financial inclusion, technology first. We are pleased to have him with us. He's someone that is fighting for developing the tech ecosystem in Africa, and we are eager to listen to his insights. Olusegun, you are with us remotely today. Are you there?
Yes, I am. Thank you very much.
Fantastic. Welcome in Luxembourg. We are all ears.
Fantastic. Thank you very much for this opportunity. Good morning. It's morning for me in Nigeria. Good morning, everybody. I am going to be speaking to you about the path to financial inclusion, the role of technology, and then I will speak briefly about some of the experiences we are having at Wema Bank, trying to address the issue around financial inclusion in Nigeria and hoping that we can expand that across Africa in due course. Thank you for making time to be part of this year's ICT Spring conference. My name and contact details are on the screen. You should be able to see that right now. I'll be happy to engage further on this subject or any other related subject matter as you please. Here's an outline for my discussion today. I've spent a bit of time to just try and consolidate the meaning or what we all mean by financial inclusion. And the objective of that is to just have some context to the conversation or to be able to frame the conversation today. I will speak briefly around the background to financial inclusion, the case for it, really, why is it an issue for us? What is the importance? The challenges so far, the challenges are enormous, but I've outlined very few of them that we will talk through. The role of technology, then I will deep dive into the ecosystem for financial inclusion, and then start to wrap up on a use case or some of our experiences at Vermeg. What is financial inclusion? I mean, there's a plethora of definitions you will find out there for it. In simple terms, I think it's about the availability and the quality of opportunities to access financial services. It is, the process by which individuals and businesses can access appropriate, affordable, timely financial products and services, essentially from banks, being able to run and have transacting bank accounts, get loans, and of course, that then expands onto other financial service products such as insurance and ability to purchase savings and deposit products. The World Bank has extensively done a lot of research around this. There are about 1.7 million people who do not, so that's about 31% of the global population who do not have access to basic financial services. That population spans across 4 continents, Asia, Africa, North and South America. More than half of that population are women, which again further widens the gender disparity gap. And the real challenge to bringing financial services to all has been identified globally as one that holds key to global economic prosperity. And this is why I'm reflecting back to some of the UN Sustainable Development Goals on this. I'll speak to that in a couple of slides, just 2 more slides ahead. Now, why is this a problem? As technology ecosystem players, why do we care about financial inclusion? The need to bring the unprivileged and the underprivileged into financial space has historically been viewed as a Herculean task. There's been a lot of neglect based on that for decades, primarily because the cost to serve this demography is growing and institutions are running at a loss. What we're finding, though, is more and more institutions today are now focused on reducing the population gap, that are financially excluded. Technology, of course, as you can appreciate, which is a fantastic platform for scale and growth, has provided enormous opportunities for those institutions to do good while doing well. We cannot underestimate the impact of technology today. It's evident. It's made life easier with a larger population now being able to work smarter and harder. These impacts are not limited to just one facet of life. They cut across all our daily interactions, from entertainment to mobility, to healthcare, and in fact, to the crux of me being here, which is in the financial sector. The United Nations global goals, also referred to as the Sustainable Development Goals, aim to end poverty, protect our platform, and promote peace and prosperity by the year 2030. There are about 17 global goals that have been defined to that objective. The drive to achieve financial inclusion ensures that at least 7 of those goals are achieved. What we're seeing, so ability to access financial services such as advisory, helps people in the agricultural sector to manage, to plan, and to achieve better financial returns, increasing food security, while services such as insurance grants give them access to good health care. Take another one, financial inclusion empowers, it means that people can invest in their children's education, with about 55% of the total population that are excluded being women. Helping to achieve inclusion would greatly improve gender equality. Achieving total financial inclusiveness and overcoming all the hurdles in between has been described by the United Nations as a key enabler for these 7 that you see on here of the Sustainable Development Goals. What we see is ensuring a robust and more inclusive system will, one, it will liberate more people from poverty. Two, it will provide better advisory services to the agricultural sector, which will increase food security. Three, it will bring insurance services such as health insurance to the rural areas and ensure that there is good health care and well-being. Fourthly, it will be, with better financial management comes the ability to plan, which means parents are then more adequately able to plan for their children's education. With women constituting more than half of the financially excluded population, it then means a robust financial ecosystem will be able to address the issues of gender disparity, which again is becoming a global phenomenon, a global challenge. And then, of course, lastly, two goals there. The path to achieving will ensure economic prosperity, which is key. So it will bring decent work and economic growth. And then, of course, it will bring improved industry, innovation, and infrastructure to the general public. The challenges, it's important to say, and I spoke earlier about the fact that, this is just a snippet of some of the challenges that have been identified to achieving financial inclusion. So financial literacy is one. The World Bank in its studies has identified that a lack of understanding of the products and services available from financial institutions is a major reason why individuals are not taking up financial services. With a better understanding and awareness, individuals can overcome these biases and make better financial decisions. This subject is an interesting one. I think it will be covered. I believe it will be covered. It will be discussed in a bit more detail in the roundtable on financial literacy, which is, I believe, about 2 sessions away from here. Another challenge that is huge is around identification. The big question that is to be asked there is, how do I verify people's identity and associate those with third-party data sources, building trust, helping me to understand my potential consumers better, but this time around, considering the level of maturity or thereof immaturity in the various geographies. And by maturity and immaturity, what I'm talking about is the general non-availability of infrastructure around many of those geographies. Especially, speaking more directly into what's available within the African context. Then the third big challenge is around consumer protection. I spoke earlier on identity verification. Problem we're trying to solve there is trust. Now on protection, the real question is, there are now a lot of payments and savings platforms. Mobile money is growing in this geography. Virtual currencies is something that we're beginning to talk about and really spend time on. And there are many other payments and collections platforms that are being adopted in different parts of the world that are attempting to address financial inclusion. But there's still a big question around trust in the authenticity and reliability of these platforms. And then lastly is a big issue. There's been a lot of focus on bringing more people without accounts into the financial ecosystem, getting the financially excluded consumers to onboard. But, there now needs to be a lot of focus on providing channels to keep those guys transacting. So what are the respective payment options that are there? Yes, we all talk cards. We talk cardless today. We talk peer-to-peer transfers. How easy are those? How much knowledge or how much confidence do these excluded demographics have, in the quality and the ease of usage of some of the platforms that are available. I spoke earlier about, trying to relate some of this with what's going on in my part of the world, in Nigeria and Africa. There is a telecommunications technology which is also being used outside of the normal digital world. and that's the unstructured, the USSD model, which essentially means that we can push payment, financial and secure information across the baseline telco framework and deliver those in areas where data and internet connectivity is an issue. So again, the growth of that, the government's or regulatory embracement of those sort of traditional or pseudo-digital options for transactions will help to resolve some of these challenges around financial inclusion. The essence of technology, you would agree, it lies in the ability to provide cost-effective, convenient, and quick services to the far-flung dreams of the continent. Now, the next slide starts to speak into, what are the various ways that these challenges can be, the gap that this gap can be bridged. There are a number of pillars that you can see on the screen on here. The first one around agency banking speaks to what I believe in Europe is facilitated by what I believe in Europe is being called around the bank-in-a-box model. Simple idea being, have a number of third-party agents acting on behalf of a financial institution to deal directly with customers under contractual agreements. These agents are affiliated with banks, fintechs, and telecommunication providers. They're used mostly for conducting cash-in payments and cash-out withdrawal transactions. And what that does is it addresses the inability to have fully functional and dependent ATMs within those demographies. But then there is connectivity. There's an aliveness that comes with financial services when those demographics can go to agents who are like hubs. They're small, the smallest unit of representation of a bank. The Central Bank of Nigeria, in collaboration with the banks in Nigeria, developed a shared agent network expansion facilities platform in 2019. And their role or their primary goal is to widen access to mobile and digital financial products and services. And these agents are controlled or regulated by this institution. And what we expect to see is the deepening or the growth, the pervasiveness of agency banks within the demography. Payments is another thing. COVID-19 or the recent pandemic has resulted in an uptick in the usage of online retail stores and more businesses have moved their business online. What that means is we now have to start looking at easier ways. So I spoke earlier about the USSD mode of payment, which is riding on the native telco infrastructure. USSD is unstructured supplementary service data. It rides on the native telecommunications 2G platform. And this is a mode of payment now that I think the next level of innovation is looking at how we can ride on that technology to facilitate online payments. There are already some players in that space locally, but again, that's just to give an example. A story that we may all be familiar with is the story of M-Pesa, driven by the same technology, created by Vodafone and Safaricom in Kenya and adopted, of course, massively within Kenya, now being extended to other countries like Tanzania, Mozambique, Democratic Republic of Congo, Lesotho, Ghana, South Africa, and Ethiopia. Savings is another pillar that is important. The concept of thrift collection has been given different names across Africa. It's become the predominant way, to bank, that the unbanked are saving money. The question to ask around there is, how can technology start to harness the various thrift collection infrastructure or platforms that exist and allow consumers to ride on technology to be able to participate on that? We within, our digital bank at Vermeg Bank, Alat, have tried to implement this on a product which we call alert goals. And that allows individuals to save a proportion of their disposable income, either as a periodic savings, as a mandatory daily deduction that is being done, or a one-off savings that they put aside towards a specific goal or a project. And these are products and services that we're finding to solve problems primarily for many of the financially excluded. Another platform gaining ground across this demography is one called Isusu Africa, which allows you to save, but also gives you the opportunity to build some credits. So that then means you can ride on the credit enablement to request for loans from other financial institutions. Other pillars that you see on there around micro-lending, insurance, and pension. And I think the way to look at this is they're a form of extending services, more financial services to the unbanked. This I see, in my view, as areas where the agency network will become even more relevant. And that's why you see that not being asterisk, because that becomes a hub that many of these services can then be fully extended to consumers. What I have on the next slide is a conversation or is an illustration of the 6 major stakeholders in the financial inclusion ecosystem. What you see there are the operators, which are primarily the banks, the mobile money operators, and or the fintechs. They are the major drivers of financial inclusion. I represent an institution that is passionate about delivering value to the overlooked, the unbanked and underbanked part of the institution or of the population. We are driving financial literacy through some CSR campaigns and have continued to close that gap using those campaigns, using the right platforms. So I spoke a lot about USSD because we find that that's what connects the most in those demographies. And we're using those to access or to achieve that goal of building financial inclusiveness. Many other, and I mean, we're not doing this in isolation. We're doing this with support from other, I'd like to use the word collaboratory and competing, so co-opetition, doing that, collectively as an industry and trying to address that problem. Distribution channels, a second area. These are a group of agents or an agency network. So the whole concept of having, I think what the European world will call a wholesale retail split in this part is primarily a super agent and agent model. So you have geographic locations clustered under a system where you have an aggregator or a super agent who is providing an oversight and controlling activities of many of the other agents, who then represent the smallest unit. So it's a one-man business, it's an MSME, but they are touch points to financial services for these unbanked population. The third stakeholder that is important to note are the processors and the switches. This could be either national switches, such as like we have in Nigeria, the Nigerian Interbank Settlement Scheme, which is the country's central switch, or independent switches, which are owned by private businesses or fintechs, as they have evolved to become. A notable one in this part is a company called Team Apt, and one of our partners. And what these switches do is they help to facilitate the exchange of value between financial service providers, merchants, their agents, customers, and of course with all other stakeholders. So the concept of peer-to-peer transfer, payment for products procured locally and internationally, all will go through the national switch, through the national or independent switch for processing, and then of course for the respective settlement and remittances as may be required. Then there are third-party vendors. These are the telecoms. Yes, hi.
Olusegun, you need to conclude. Your time is almost up.
Thank you. Then there are the third-party vendors, the customers, the investors, and the supporting bodies. Notable in the supporting bodies are primarily the regulators, who are the stakeholders in driving financial inclusion at the fiscal and monetary levels. What you then see on the next slide are, you know, the areas with which technology alone must be able to support. So technology is not the only dependency for the success of financial inclusion. So regulations need to be aimed at enforcing low-cost retail accounts. We need to look at integration of digital channels into the community engagement. So the local thrift segments, the clusters for traders. We need to look at integrating digital channels from there. Approaching mobile money slightly differently, so learning from some of the models that we've got across Kenya and some parts of Africa, firming up on people to government payments and government to people. I think that will essentially drive people to become more financially included. And then, of course, looking at introducing a lot more around financial literacy programs. We'll attempt to solve this. What this slide is speaking to
we need to conclude. Very sorry, we need to switch.
Thank you. What this speaks to are the supporting infrastructure for financial inclusion. And lastly, this is some of the story around the work that we are doing in Nigeria. Partnerships, some of them are being empowered and embodied by some global fintechs, Flutterwave, Cellular, and Paystack, are partners that help us with deepen that. I think I'll leave my message today from a quote borrowed from Winnie Biama, which is essentially speaking to what is growth, if not to help ordinary people thrive. I will stop today. I'm happy to carry on with further conversations. My contact details are on there. And I'd like to say thank you very much for listening, and bye-bye for now. Thank you.
Thank you so much. Thank you so much for having joined from Nigeria. Ladies and gentlemen, our next speaker is my friend from Belgium, Morgan Wirtz, a young entrepreneur passionate about Generation Z and neobanking. He co-founded UpI with Philippe Henin, which has become Rise recently. He has come to share the story behind the launch of Rise. Morgan, the stage is yours. Here. Oui, ici, voilà. Oui, bien sûr. Tous ouverts, c'est bon.
Well, thank you for being there. I'm excited today to share you the journey of building Rise, which is a digital bank for teens, and share some of the learnings we've got along the way. So, if I do take a quick step back, so Rise, it's a digital bank for teens between 10 and 18 and their parents. And we have a mission to create a financially savvy generation. So what does it mean concretely? We want to be the alternative for the parents when it comes to open a bank account for your teen. And we've built the whole value proposition around financial education. A few numbers. We've been funded in January last year. We've just raised 1.6 million as a seed round. And we have currently 15 team members. So financial education for teenagers, I mean, that's one of the reasons why we've built Rise. It's one of the most underrated topic within education as a teen. It's not something you learn in school as a teen, and it's quite limited as a topic within families. And the product developed by traditional banks, it's not built in this regard. So the timeline of launching Rise, this is actually the topic of the keynote today. This is what it has been looked like. So I want to deep dive into specific topic. The first one, how we've built the product vision, because I guess that's how we create the value. And then the second one, as we are in a tech conference, what's the, let's say, the tech behind our product. So this has been the secret sauce when it comes to build the product vision behind Rise. So these are the 4 ingredients we've used to launch, or let's say to build the product and to understand what are the key features we had to build. The first one, I mean, any tech founder can recognize testing with your end users, obviously testing with families. But anyway, if you test with the end user, you can get feedback on what you are building, but you won't innovate that much, right? So the second one that we've been using, it's basically talking to psychologists, understanding, okay, what's behind financial education, what are the key principles, what's the most important for teens to learn about money. So this has been the second ingredient to build our product vision. The third one, I guess, again, any founder can understand that, becoming an expert in your market. But further than that, it's been, I guess, 2.5 years that we've been following this market of, neobanks. Neobanks focus on teenagers, understanding how this market is evolving, what works, what doesn't, and really trying to understand the patterns. And that's actually key to gain, let's say, a few months, a few years of testing just by looking at competitors. And then the last ingredients we've used to build a product vision, it's actually meeting with other product designers, product leaders from the same industry, from other neobanks, just discussing with them, get their learnings. They've been on the market for years, and again, we did gain a few months, a few years just by discussing with them. So what's the conclusion there, or at least what's our vision on how to solve financial education or actually translate this within the product? What are some of the learnings? So basically, as I mentioned, it's a digital bank. So we have 2 interfaces. We have one interface for the teen, one for the parents. And the main principle for teens, actually the main principle of the product, is to let teens make their own trade-off decision. So what does that mean? When you think about building a neobank for teens, and solving this financial education problem, you think about, I'm going to give some advice to the teen. You shouldn't spend there. You should spend there instead, or you should save your money, or build some sort of gamification to incentivize the teen to put money aside, for instance. But actually, the key there, it's really to let or to push the teen to make their own decisions with their money. What should I actually do with my money? Should I spend my money? Should I set my money aside, save my money and set myself a goal? Should I actually invest my money? Should I give my money to a charity? In order to do that, to push the teen to have those reflections as early as possible, you need to provide the teens with those tools. So that's essentially what we are building. Totally simplified spending account, savings account, investment account for the teen to learn about money. And then for the parent, the main principle is to create a safe environment, safe space for your teen to learn about money. So the parent has, his, her own interface and parental controls to see what the teens is doing and to help the teens within his, her education. The second, let's say, principle or element of the timeline I want to focus on today is the tech infrastructure behind Rise. So this is a team, by the way, the engineering team at Rise. So from the first day building Rise, we knew it would have been key to build a strong engineering team. Why? Because we need to be super fast to win this game in this market. We need to be fast in delivering features. We need to be fast in scaling up in other countries as well. So we need from the first day to build, let's say, a strong engineering team in-house. So we've made a few quite strong choices in our tech to be able to focus on what has value for the customer, right? So this is what the Rise tech looks like. The first learning there, we hadn't, let's say, to build the whole core banking system from scratch, because at the end of the day, it's not what has value for the customer. What has value is really the mobile app and the features around financial education. So the first learning, we've been partnering with a core banking system. I know, I don't remember her name, but she was talking to the previous panel, and that's exactly what she does with her company. So we've been partnering with such a company, and then we plug our system to them. So that's the core banking system. We've been building everything cloud native. I guess for tech startups it is quite obvious, but perhaps not for traditional banks. And then last one, the choice of technologies for let's say the backend infrastructure and mobile infrastructure. We've been using Kotlin for backend, which is quite also a revolution and has been quite a success so far. And Flutter for the mobile app. What's the benefit of using Flutter? Let's say we don't have to get two teams, an iOS team to push your app on Apple, and then an Android team to push your app on Google stores. So this has been quite a successful choice as well. And then I want to conclude on my role as a young, product leader, founder. When I started Rise, I had a very clear vision about the product, about where I wanted to go. I wanted to push everyone in this direction. But what I quickly understand, my role as a product leader, it's more about giving the North Star to the whole team. Telling them that's where we want to go, that's what we want to solve as a problem, these are the overall guidelines, and then just find experts and let them find their ways. And that's how we've built the engineering team. I guess that's it for my keynote today.
Much, Morgan. Thank you, Morgan. Please stay on stage as you are a panelist for the next round. So have a seat. And topic of today, thank you so much. It's fine. Yeah, keep the mic. So the topic is financial literacy and the next generation. And for this roundtable, we welcome my good friend Ananda Coates, Head of Innovation, Digital Banking and Payments of ABBL, as moderator, together with Joachim Sojblom, co-founder and CEO of MENA Technologies, and Amin Bunju, co-founder and CEO of Card. Welcome on stage. Come. Don't be shy. Have a seat, take a mic. Ananda, I'll let you introduce the topic of the roundtable as we connect with the other speakers who are joining us remotely. So Joachim, which is joining us. Thank you.
Thank you, Thibault. Is it working? Yeah, perfect. Thank you so much, Thibault, to have us here at this great event. So just a quick introduction about myself. So my name is Ananda Coates. I'm Head of Innovation, Digital and Payments at ABBL. And I'm very happy to moderate this panel about financial literacy and the next generation. So ABBL is the Luxembourg Banking Association, and we interact not only with banks, but also with players like the ones we have today, such as neobanks, fintechs, and financial institutions. So we really believe in collaboration between the financial sector as a whole, and I think that financial education is one key topic for mutualization as well. So at ABBL, we are very active in at national level, at least, in financial programs. So I'm very happy to have this talk today about financial literacy and also about this next generation, which I think we all are kind of not part anymore of this. So I'm happy to have those three amazing panelists today. So they're very young, very ambitious, and also they have in common their focus on financial literacy. So Amin Bonjour, who is the CEO and also co-founder, COO, and co-founder of Card. And we have, of course, we know Morgan Wirtz now, and he's the co-founder and CEO of Rise. And we also have Joachim Sjöblom, who is from Sweden. Hello, he's the co-founder and CEO of MENA Technologies. Hello, Joachim, can you hear as well?
I can hear you fine.
Oh, that's great. So thank you for joining. I hope you have better weather than we have today here in Luxembourg, in Sweden. So just to start, maybe I would invite you to say briefly a little bit about yourself and also about your company, of course. So maybe, Amin, would you like to start?
Yes, with pleasure. Hello, everyone. Thank you for having me here today. So my name is Amin. I'm 32 years old. I grew up in Morocco, and I left in 2006 to study in France. So I arrived in France. I was 17 years old, just by myself. My parents were in Morocco, and that was the first time actually I had to experience banking, and you know, it always stayed in my mind that it's not that easy to like just start using a bank account at 17 without having any learnings before. So I studied in France, graduated in 2013. I'm an engineer and studied business as well. I worked in banking for 5 years, and I left Goldman Sachs in 2018 to travel for a year and then start card with Scott, my friend.
Great. How about you? And for those who are just joining.
Thank you, Amanda. Well, so I'm, as you mentioned, CEO co-founder of Rise. I'm 22. I'm mainly passionate about product. That's what I love. That's where I try to spend most of my time at Rise today. And obviously, financial education. I'm part of Gen Z, and I knew there was, something to do in this industry.
Thank you. Joachim, your turn.
Thank you, Ananda. So my name is Joachim. I'm one of the co-founders of MENA. So I've been working within fintech since 2014. So before open banking and PSD2 was a thing. Working within recurring payments and the area of subscription management, and all of our products are distributed through retail banks. So a lot of experience on the partnership side that you started with.
Okay, great. So I think that you all see, from what I understand, a sense of urgency in terms of financial literacy for the next generation. So I think it would be interesting that you explain why financial literacy is so important today and for the youth. And to understand well, maybe you can give some insights also about who your clients are the children, what age, parents, so are the digital natives. So maybe we can start with you, Amin.
Sure. I think we should just, look at it in a very, very simple manner. It's just, so when you're a kid or when you're a teenager, you go to school, probably you learn about like sports or learn to do like to play some music or whatever. You learn skills, right? And some, of course, will be useful in your future. Some will not, will maybe just form like your way of thinking or just general education or soft skills. But anyways, there are going to be a lot of things that you will never use in your life, but there is one thing that you will for sure, as long as you live in a developed country, there is one thing that you will for sure experience is manage a bank account and manage money, get, incoming payment, having to manage your budget, try not to be on overdraft at the end of the month, save for your project, save for your family, save for your future. And it's like everything. If the first time you have to drive a car, we give you a super fast car and we tell you like go on the highway, it's just simply not going to work. And I think it's just very simple. It's like everything in life you need to learn, and managing hundreds of euros, thousands of euros is not easy if you start by these amounts. Like it's just simple, much more simple, and I think much more sane if you learn, with 5 euros, 10 euros, 15 euros, 20 euros, and as you grow up, and it's the same for investment, it's the same for savings, it's the same for, I think everything, and obviously you cannot do it without your parents being involved in the experience. So I think that's really why people need to be educated financially, because everyone will have access to finance and will face managing a budget, and this needs to be taught and this needs to be learned just like everything else. I think it's just it's as simple as that. That's
so your clients are from what age?
From 10 years old. So that's what we do today. I think it will probably go lower and lower as we as the industry matures and as parents become also more educated about the fact that they need to actually give access to the children to finance. But we start at 10 today until 17 to open an account. Obviously, if you entered before 18 and then you get 18 years old, you can obviously stay. But to open an account, you have to be between 10 and 17 years old. The average age is between 13 and 14 years old, and parents are around between 40 and 42 years old.
Okay, great. How about Rise? Same kind of clientele and.
Sure, I guess it starts from the same analysis than I mean. So we target indeed teenagers, but teenagers is more from, let's say, a product standpoint, so how we help them to learn about money. But we have this dual target because the parent is also a client, and our role is also to help the parent to, to raise those financially savvy teens. And what we've noticed from this generation, and that's also our approach, which is, I guess, also part of the DNA of Card, which is this Gen Z, they want to have sort of, let's say, hands-on learning approach. It is quite important. That's also why within the product, it's all about learning by doing. That's what I mentioned in my keynote, why we don't give we don't really give advice to the team. We provide more the team with the tools, and then it's really up to the team to learn by doing, basically.
Great. Joachim, how about you? Why financial literacy is so important also in the markets you are targeting? And have you seen any trends? Has COVID accelerated anything around that?
It's a great question. And I think we need to start with the perception of banking as a whole. So the younger generation of today, they don't visit branches as often. We use cash less frequently. And in our universe, the area of recurring payments is also so big. So the Gen Z and the millennials, and actually most of the generations, no longer buy CDs and DVDs. We subscribe to Spotify and Netflix instead. And financial literacy, when you have a lot of automated recurring payments, it takes a new twist of things. So how can we help consumers to avoid what is known as subscription traps? So you might pay $1 to read a news article, or you might starting to subscribe to groceries when you live in a pandemic. All of these automated recurring payments, you need a layer of convenience to manage it. So we can see thousands of consumers that have double Spotify accounts, or you're still paying for Netflix even though your favorite series has ended. So can we control those automated payments? That's a lot of convenience for the customer.
Okay, great. So I think we all understand here that financial education is the heart of your strategy, but how do you translate it concretely into your product strategy? Would you like to start, Morgan?
Sure. And again, that's also what I introduced a little bit in the presentation. And that's where we allocated most of the energy and resources. It's really trying to understand what were the main principles there and prioritize then the product roadmap on how to actually solve this financial education problem. And again, the first thing that pops up into your mind when you have the first brainstorming on building a digital bank for teens is we will give a lot of advice, we will guide the teen, we will build a lot of gamifications, but actually this makes your product super complex. And I don't believe it's the main principle. The main principle is really pushing the team as when you will get your first salary a few years later, what I'm going to do with my money, how to manage my money in a healthy way. Should I spend my money? Should I save my money? Should I invest my money? Should I give my money? So it's really to push the team to have those reflections as early as possible, but everything in a safe environment, let's say, managed by the parent.
How about cards? Is it about the same or different?
I completely agree with Morgan's and Rice's vision on not like getting into kind of being a teacher for kids, or making your product kind of a school about finance. This is not the point. And I agree with the fact that teenagers and kids are very, very much equipped today to learn by doing, and as long as they have the right setup with their parents, and it's a safe environment that allows them to do so, and that's the kind of environment that Card provides them. But I think that the other aspect that is very important is that we also educate, like we also manage to bring financial literacy and education to the kid, because we also educate the parents. And one key component today, one key issue of financial literacy is that parents didn't have access to financial literacy when they were kids. Talking about money is very often like a very taboo topic, especially in France. And people, school doesn't teach you about money, you don't learn about money, you don't hear about money at school, and parents don't talk to their kids about money. And I think a platform like Cards also allows parents to have kind of a tool, a technology. It's a platform that allows them to talk about money with their kids, and that's something that like kind of liberates, speaking about money, and that contributes to the education of their kids. It kind of breaks the taboo about money in the family, and that eventually leads to financial education for the kids. And I think that's the number one, and the I would say the best feedback we have received from family when we ask them like, what really has Cards solved for you, and they don't really reply, okay, it's fast, it's cool, it's easy to use. They say it allowed me to speak about money with my kids, and I think that's very rewarding.
Yeah, very interesting. Joachim, I think MENA Technologies, you have a different product approach.
Yeah, so don't get me wrong, I think education is important, but I think convenience will trump everything. So if I go out driving a car today, I will use Google Maps. I don't need to learn the map in my head. The technology can do that for me. And we think that most consumers, unfortunately, think that personal finances are quite boring. So from a customer centricity perspective in product development, how can we make finance work for you so you don't need to learn? And we are distributing and partnering with retail banks, as mentioned. Most retail banks are very bad at this. So if you look at Monzo, Revolut, N26, and all of the neobanks and challengers, they are better at this, providing the financial tools to make the money work for you so you don't need to learn and you don't need to think. So from a product roadmap, I think doing it for the customer is more important than educating the customer.
Yeah, it's interesting that you talk about the traditional banks as well. So I would be interested to know, how do you differentiate also from the traditional banks? To be very concrete, actually, I'm a mom myself of children who have age to have pocket money, and I'm quite happy with the bank that I have today, traditional bank, and of course I have opened an account at this bank for them. So most parents are probably having the same kind of attitude. So how do you convince parents who are satisfied with their traditional bank to open an account for the children at a digital bank? So like Card or Rise. So would you like to start?
Well, I guess what really rings the bell to the parent, it's this financial education aspect, beyond just the banking, or let's say the bank account with your traditional bank. Usually the product for teens, you have spending card, you have a spending account, you can spend in it, and that's it, right? So okay, for the convenience part of it, it's good, but it won't help the teen to actually learn about money, learn about saving, investing, setting goals, which are key principles for the future. So I guess we mainly differentiate with those aspects within the product. So we are essentially building savings accounts, spending account, investment account as well, but totally simplified, which is not something you get with your traditional bank.
Yeah, I agree with that. I think, of course, there is the first pillar of differentiation is exactly the way all the first way of neobanks like Revolut and N26, they managed to get millions and millions of customers away from traditional banks, is simplicity, transparency of price, fluidity of experience, reactivity of customer service. You get an answer in 5 minutes and not in 10 days, and all these aspects, like transparency on fees, all these aspects, I think they are here as well, and you still don't get that with traditional banks, and that's something that today customers are more and more looking at when they choose a financial partner. So this still exists for us, and this still makes us a very strong differentiator with traditional banks. Open an account in 3 minutes and not in like 1 week with 100 documents. But that's kind of a commodity today, right? In like it's kind of the basics, but it's still there and still has a lot of value compared to traditional banks. And I think the other aspect is definitely how we act as we're not like just a bank, which is it's also a commodity. It's like an account and a card, and everybody does that, of course. And like a card with traditional banks and the card with digital bank still pays the same, right? And there's no difference about that. But I think parents and families, they don't see us like just a bank. They see us like a financial companion, and they see us like the partner that will allow them to actually raise their kids as financially smart. And that's because of the experience in the product, because of the features we offer to the kids, because of the features we offer to the parents, which you don't find in traditional bank, because of the content we produce, the brand, and it's just we really are kind of a partner in their education of their kids, and that's the key differentiator.
Thank you. MENA Technology is actually collaborating with traditional banks. You have a B2B2C approach, but in the beginning it was not the case. In the beginning you started as a B2C. So Joachim, would be interesting to hear about this strategic change and what motivated you, and if you think that the future of also the startups is in collaboration with traditional banks.
Yeah, it feels like I'm playing on the other team now compared to the other panel members, but it's good for the discussion. So we also started as a B2C company. So we had our own applications and we served recurring payments and subscription management through that interface. But we learned quite quickly that customers don't want 2, 3, 4, 5 different apps to manage their finances. And we got the feedback that I would prefer if I could do this within my bank. Just looking at myself, I have a Revolut card, but I put it in a drawer because I didn't change my behavior. So as long as the bank is the primary source for your financial errands, if the bank can provide the same value as the challengers, I think they'll have the opportunity to retain the customers. So today we have a reach of more than 20 million retail customers in Europe. If we were to achieve 20 million in a B2C business model, it will be super expensive to do customer acquisition in such a model. So I think that banks that have the reach and have the customer base, they can collaborate to get that good customer experience and good solutions available to their customers. So this is usually referred to as embedded fintech. So we're working with ING, for example, in the Benelux region. So instead of downloading a third-party app, you can just go into your ING app and get direct access to the same value. And that is more convenient. So once again, going into customer centricity, convenience, one app, do it all. I think that is more of a future behavior than having 5 separate apps.
Okay, interesting. So how about you guys? Do you see room for a collaboration with traditional banks, or you're really positioned as challengers?
Well, I think the specificity of our audience is that they don't have a bank account, right? So it's nothing, comparable to like Revolut or N26 or adults with all these like free neobanks. And in fact, people have 4 or 5 cards in their wallet and 4 or 5 apps. And I agree, that doesn't really make sense and doesn't really has any value. But the specificity with us is that we are actually the first and the only and the primary bank account of our users. And if you look at it, 95%, at least in France, 95% of people aged below 30 years old, they have one bank account and it's their first one. And they usually got it at 16, 17, and it's usually the bank of their parents. And what we're doing today is that we're shifting this primary bank account to this primary bank relationship, or this first, at least, bank relationship with us, because teenagers, they want that. They don't want to be banked with the traditional banks. And I think they will stay with us because it's, you don't leave a bank when you don't like your bank. So I think when you actually like it, you stay. So that's what we believe and that we're working for.
Okay, how about Rise?
I mean, indeed, the key focus now is the product for B2C, being the alternative to the traditional bank. So as totally the point of Amin. So we are the first bank account of the teen, opened by the parents. But partnership with a bank, perhaps in the long term, what I see, and that's, I guess, related to MENA technologies. I've seen some competitors doing the same in the US. So basically, they've been building their expertise and their value proposition on building a super strong user experience for teens and around financial literacy. And then they partner with banks and they embed their products so banks can provide to their customers a better, let's say, a product for teens, but with their own core banking system. So still with their own accounts behind, with the experience of this competitor. So I do see this perhaps as a partnership in the long term, but key focus right now, it's our own product.
Well, great to hear there's room for collaboration. So actually, we understand that you're also targeting much the parents. So just maybe to conclude, it would be nice to say a last word you would like to say about the parents who are listening to us today, which are maybe your future clients, and eventually the youth. If who knows, maybe there's some youth people also listening to our discussion. Any advice you would like to share, Amin?
Yeah, the only advice I'd like to share is you can't miss this part of the education for your kids. That's it. And I'm not saying that, card is the solution to do it, or a neobank, or, you might find another way. But I think eventually what matters is that you can't afford to miss this financial, like making your kids sensitive to about money and learn about how to manage and not to be afraid of money.
Thank you. How about you, Morgan?
Well, I guess probably the same. It is so important, and when you talk to adults, usually a lot of them are complaining because they are super savvy, but managing your money, it's just underrated. It's not something you most of people are doing. So definitely just start as early as possible, and the initiative will come from the parents. So
great, Joachim, the last words for you.
I agree with the two others, and it was actually on the news yesterday in Sweden that there was a new record in the amount of customers that applied for personal bankruptcy, and that was subject to the access to buy now, pay later and easy credits. And money is so intangible, you can't touch it anymore when it's digital. So making sure that your kids understand what money is in an early stage, well, it's the one tool that you have to avoid them going into personal bankruptcy. So I can just agree.
Wow, thank you so much to the three of you. It was a very pleasure to have this discussion and also to learn how next generation is becoming a key. You have a specific approach to this and how financial literacy is so important. So thank you very much.
Thank you, Hanna.
Thank you.
Thank you all for this engaging last roundtable of the morning. We had fantastic sessions on digital banking around the world. I would like to acknowledge all the speakers' preparation and dedication for presenting today. Now we have the lunch break, and as you know, there is also a fantastic exhibition upstairs with a lot of exhibitors showing the future trends of our industry. And we will have new sessions at 2 p.m. this afternoon. See you guys and have a nice lunch. Bye.